You're listening to the ZABE Smart Mortgage Podcast, a podcast show that inspires and educates you about the lending process, what trends we're seeing, how to get the best rate, and so much more. Hosted by Fidel Dorado, team leader for the Fidel Dorado team at ZABE Mortgage Group. Fidel has helped hundreds of people with their mortgages, and now he wants to help you become mortgage smart.
All right, Hector. So another big topic is out there is, right now in our country is we have homeowners that have, we built up the most equity that we've had in the history of our country. And I know that you as an investor and, purchasing your home, several years ago and being able to leverage the equity and things like that. So what are some smart ways, some smart ideas that you can, use your equity, and how can we do it to use it in a smart way?
There's a lot of benefits to having that, sitting on so much equity. Pretty much you have that set amount of capital, just you're literally quite sitting on. Mm-hmm. And if you can tap into that, leverage that in a smart way, it can definitely help promote your future financial stability. Mm-hmm. And that is a matter of linking up with folks that have done it versus folks that are teaching theory. Mm-hmm. Linking up with people that are making those moves, making those strides, moving that money around, doing things that are just helping them. And it's a matter of taking action in that as well.
I know that you've, through the years, you've acquired properties. Is that what your approach was? Is it you used the equity from
my initial purchase? No, it was not. It was just over time using my own financial, savings. But there are folks that do want to jump in this arena and don't have that egg they can tap into. Mm-hmm. And if you're sitting on a substantial amount of equity, and you can move that and multiply and grow and pretty much play the monopoly game in a safe way, do it.
Yeah.
Do it.
Smart way, safe way.
And it's linking up with another, it doesn't have to be us, but it can be any real estate professional that has an experience in strategizing in investments. Mm-hmm. And somebody that can analyze a future investment, and it's not just a matter of buying any real estate. It's you have to analyze a deal. You have to analyze it, structure it where it makes sense. Sit down with a financial person such as yourself that can help them get into the right loan to leverage that equity and place it into other assets. There's so many methods you can grow. You can start with your personal home in a safe way, and grow it using strategies such as the BRRRR method, where you buy, mm-hmm. you rehab. You rent the property, you refinance it, mm-hmm. and then you repeat it, and you keep doing that method, and that's a safe way to go, so long as the deal is analyzed correctly. You're going on debt pay down. That you rent the property out, you're going on debt pay down. The tenant is paying the debt down for you, mm-hmm. and you can have a positive cash flow. From that positive cash flow, then those are your profits after your expenses. But it's a matter of learning that process, getting into that space, that realm, and you're going to do that by linking up with people that have done it.
And that's just one aspect of it, right? As far as buying, additional, using that leverage to buy additional mm-hmm. homes, and when you're investing in other properties, it's not just, people just think the cash flow is just basically off just the mortgage payment versus the rent you're collecting. But there's a lot more that goes into it. For example, you have to set aside some money for vacancy factor, right? You have to set aside for money for some repairs. You have to set maintenance. Property management company, for example, is another thing. Mm-hmm. If there are HOA dues. So there's a lot of things that you have to take into account before you, at the end of the day, look at what that positive cash flow is, right? Mm-hmm. Before you make that smart decision. Okay, well, is this a smart decision? So those are the things that you can look at. Other smart approach to using your equity is, we've seen finance, for example, education. We've seen it finance retirement or other business opportunities that may open up by using or leveraging the equity that you've built up in your home in a smart way, so to help you continue, build your wealth or stability and things like that, right?
Yeah, I think it just goes back to where you're at in your frequency, where you're at in your cycle of life. Some folks are in a state of growth. They have a higher risk tolerance. They want to move things around. Mm-hmm. Some folks are in a state of stability where they've done that, been there, done that. Now they're sitting on all these assets, and they want to just pay for their daughter's wedding, help their grandchild buy their first home. So, or just get a more stable financial footing, being, paying off debts.
Yeah.
Consolidation of debts. Using that money wisely, using that money to your best advantage, to what fits your plan, is what something that, sitting down with somebody like you, that you can help them, guide them through.
Yeah, and the thing is that, like, that's one of the things is paying down debt as well as another, can be a really smart way to leverage your equity, to give you that peace of mind, right? To give you that financial freedom. Mm-hmm. So, there's been situations where I have clients come in and they are strongly opposed to paying off debt, yet they have, almost $1,200 worth of debt, whether it be a combination of credit cards, auto loans, just different things like that they've accumulated, and they have tons of equity, and maybe they've been living there, they pay down their mortgage about a good 10 years, so they have 20 years left. And so, to be able to understand how to properly leverage that equity, paying cash out refinance is not always a bad thing, right? It can be a good thing. So, for example, if your mortgage payment is let's just say $1,500 a month, right, and you have an additional $1,200 in monthly debt, and you've already been living in the property for 10 years, you're now down to 20 years. There's nothing wrong with getting cash out, maybe going into a 30-year mortgage, back into a 30. You're not losing time. None of that kind of stuff happens. Going back into a 30-year on paper, and then paying off all that debt. Now your mortgage payment is roughly maybe about, maybe $1,600 a month. But in reality, you knocked off $1,200 worth a month in payments, debt that you may have.
They literally give themselves a pay raise.
Exactly.
They free up their monthly income at that point.
They free it up, but then what you can do is also, you're concerned about the 30-year. Well, you can shift that now and send it right. It doesn't have to be the full $1,200. It could be, half of that money shifted back to the principal payment, right, towards your mortgage. So your payment is $1,600. You send an additional $600, and now instead of paying it off in the 30 years, now you're down to maybe 18, 20 years. Yeah. So, it's just a smart approach of how to do things like that people maybe sometimes have the misconception of like, a 30-year going back, I'm losing all that time. Yeah. But it's just learning how to play with your money to make it work for you. And there's so many advantages by doing that. Now you get rid of all that debt that, who knows, you're paying 28, 30% interest on those credit cards, 5, 6, 7% or more. Yeah. So when are you going to pay it off? Yeah. Right? And you have all this stress, you're mentally drained, having to work overtime just to kind of keep up with those payments, where now you can shift it over, have a smarter approach to it. But as long as you understand what the total cost is going to be, you have to understand, the lender has to give you that really true side-by-side analysis, total cost analysis, so you have fully understand, is it beneficial for me?
Does it make sense?
It has to make sense.
And it makes sense.
Yeah.
Yeah, because your home can be your bank.
Yeah.
But like even a normal depository bank, you can overdraw. Mm-hmm. And that can happen with your home. Yeah. You do want to be sitting on a stable foundation. You do want to have your home, especially, you don't want to over leverage your home. I will never encourage anybody to do that. And that's for the folks that want to tap in. They want to tap into their equity, and they want to shift things around. But then again, there's folks that prefer to have debt pay down, or not debt pay down, but rather mortgage pay down, mm-hmm. where they want to get into a 10, 15-year loan. They don't want to go the full duration, mm-hmm. and they want to refinance, not pull any of their equity out, and just eliminate their mortgage payment. Their ultimate goal is to have their home free and clear. Yeah. That's another lens, mm-hmm. and that's another another avenue to go down, where that's also great. Not everybody needs to tap into their equity and to shift that around. Some people just want to have their foundation, their home base, not have to worry about it, and they're able to do things through other means. And
that's their fulfillment. And, mm-hmm. and I completely agree with that. Mm-hmm. That's why understanding as a lender, understanding what the goals are, understanding mm-hmm. What your goals are, not just this next year, but in 5 years, 10 years, 20 years, 30 years, year number 50. Building your legacy for your kids, your grandkids, your great grandkids. What you want to build for them. And again, that goes back to what we talk about in home ownership by design, right? Is the idea of buying your house, to getting keys, to the goal of paying it off, and maybe what happens, after that, right? And how you can leverage that home to help you build that wealth that you're looking for, or help you fulfill that dream that you're chasing and things like that. So, but there's different ways, Hector. There's different ways of being able to tap into that equity, right? And as a lender, and maybe you as an investor, doing the things like that, you can either refinance, tap that equity. You can tap into that equity. You can pull out an equity line, right? A home equity line of credit. That's one way. You can do a standalone second, to tap into that equity as well. So there is different methods, different ways. Have you ever done any of those? Have you heard of those? Anything that you've are familiar with?
I'm very familiar with all of them. And you just have to kind of outweigh each other and see which one makes more financial sense for you. But as far as using that equity to grow a portfolio of other assets, it's a very sound way if you go into that investment arena. It's to sit down with a pro and see all your options. See which ones are going to pencil out, and then that's how you analyze even the purchase of the property you're trying to do. You're trying to accomplish a purchase. You need to analyze that deal the same way you have to kind of analyze which mortgage product you want to go with.
Yeah.
And there's so many opportunities right now with investment. It's it's kind of unreal. I'm not sure if you're aware. Obviously, is the state of California has our local municipalities here have adopted what California is doing as far as ADUs, accessory dwelling units.
Yeah.
There's CalHFA is now offering grants, $25,000 grant.
Yeah.
So let's say if you own your home and that's the only asset you own, depending on where you're located, you can essentially turn it into a duplex, and you're going to have an accessory dwelling unit so far as you meet the guidelines or setback requirements for the city to build a small studio apartment that can be financed, and at that point you can have cash flow, and that cash flow can even pay your mortgage.
Yeah.
So you can in a sense live in your home for free.
Yeah.
Where the back unit is now paying the front unit, and you're doing some form of investment arbitrage where it's now you have no debt. So it's a matter of running numbers and leveraging the opportunity you have.
Well, and then not only that, what does it do to the value of your home? Exactly. By being able to add that ADU there, so there's so many opportunities out there. And it comes down to just really making a smart decision, getting with the right financial person that's going to listen to your goals and help you put together a smarter strategy to help you accomplish, what your goals are and things like that. So, and that's what we like to do. That's a part of homeownership by design. Talking about CalHFA, I'm happy I'm proud to be a part of CalHFA. I'm one of their top lending heroes that they have listed. So, I'm very familiar with the program and what it does and how it helps families. In full transparency, unfortunately, we don't have access to using that program as far as my office does, but we can refer them to the right lender that that specializes in that particular program, because it is $25,000 in a grant that can help with help building an accessory dwelling unit. That's really good.
That's big.
Yeah, it's really big. Yeah.
That's
so
big.
And there's other programs. I'm sure there's other programs out there that can really do that kind of stuff. Especially here that the state of California has adopted that to allow for things like that. So. And
it's all due to the housing shortage.
Yeah. Yeah. So, again, going back to the different programs that is out there, just so people can really get an understanding of what they can do and how they can approach their equity is, again, you could either refinance, right? Do a cash out refinance. Max is 80%. The new loan cannot be more than 80% loan to value. So you do cash out refinance. That's one way. One payment, right? You're pretty much redoing your loan. Or there is a standalone second. Standalone seconds really are where you take out a second loan. They pay you out whatever the amount that loan is for, and you start making payments already at a fixed rate, maybe on a 15-year term, 20-year term, and your payments are principal and interest, but you have the money available to you. It's not a draw or anything like that. Then you have your equity lines where think of a big giant credit card. right? You may have an equity line where it's on a 10-year draw, where you can draw on it for the first 10 years, and then it becomes a fully amortized loan over maybe 20 or 25 years, right? Or even 15 years, where you have to start paying back into the principal and interest. So the first 10 years can be where you draw, you're paying interest only, and it is a variable rate, but you're only paying on what you use. So think of it like a giant credit card. So that's, again, refinance the full mortgage, pull the cash out. That's one way. Number two is a standalone second, right, where it's a fixed rate for the term of the loan. You're paying right from the very beginning as soon as the loan is funded, or the equity line of credit, which again is you pay as you go, pay as you use. It's more of it's a variable rate. But as of right now, I mean, with those either one of those, with rates being historically low, I mean, they think you just have to find out what is the best strategy for you and what your goals are and how you want to go about accomplishing those goals, making smart decisions. That's what it is.
Definitely. And it's a time to take advantage of that. It may sound like an oxymoron, but there is such a good thing as good debt. Mm-hmm. There's good debt and there's bad debt. So the typical consumer debts is the debts that if you're looking to refinance to eliminate, wash that away, great. If you're looking to leverage with good debt, sound debt, stable debt, such as in real estate, you can use that to grow. You can use that to build that financial legacy for yourself and your family, and that's a matter of linking up with the pro.
Yeah, I mean, I agree 100%. I mean, I seen what you've done, leverage your equity and things like that, or the homes that you've invested in and things like that, and I try to use the same approach with that as well, and try to use the leverage from our homes that we have, and I think it's a smart way to do things. But again, it's just going down to making sure that you have a clear goal in mind, hooked up with the right people that are going to give you good sound advice and put together the right strategies for you. And I think that's going to be something that can really help people, build their wealth, grow. Yeah, exactly. So, Hector, thanks, man. I appreciate you taking the time. I know it's your first podcast, right? Your very first podcast. So believe me, I still I still get the nerves. Believe me, I still get the nerves and stuff like that. So hopefully, as we can continue to put content out there that I feel, that is valuable, not just for clients, but also for, our real estate partners, our business partners, other lenders, anybody that is tuning in. Hopefully they can pull out some nuggets from here to at the end of the day, we can serve our community better. We become better loan officers, be better realtors, to pass that on to serve our community better. Yeah. And so again, I want to say thank you.
And this is just the tip of the iceberg. Yeah. Anything that we know that we've gained over these past, however long we've been in this business. Yeah. Is at our clients' disposal, their access. So we're open books, and reach out to us, and we'll definitely share it and get you on the path that you need to get on in order to achieve what you want to achieve.
Yeah, and even if we don't have the answers right then and there, I mean, we'll do the research. We'll roll up our sleeves, and we'll find out what we have to do to provide the proper advice and stuff like that. So thanks, Hector, again, man. Hopefully you had a good time. And, I did. And hopefully, we'll have you back here pretty soon. So thanks, man.
This has been an episode of the ZABE Smart Mortgage Podcast. Whether you're a first-time home buyer, purchasing your next home, or refinancing, being smart about your mortgage options will save you time and money. ZABE Mortgage Group connects you to the technology, resources, and education to make you mortgage smart. From pre-approval to applying to getting approved and managing your loan, visit zabemortgage.com.